Hey, good afternoon. Being a veteran myself, I'm pretty passionate about doing VA loans, and there's a lot of misconceptions that go around with those. The guidelines aren't written black and white, they are written open for interpretation. That way, your VA underwriter, such as we have in our branch, James here, can use those guidelines in order to help the veteran qualify within his means, right? That's our job, loan officers and the VA underwriter, to help get people approved. One of the misconceptions is debt to income ratio. A lot of people think it's like you're 31 and 43, like FHA for some reason. It's not. VA doesn't have a debt to income ratio restriction. It's based on residual income. I've been able to actually qualify buyers that have a 73% debt ratio because they have the residual income to qualify. And that's because I can still get a DU approval on it. So a lot of lenders don't run the approval engines and they don't follow the raw VA guidelines, and they just cut people off on the debt to income ratio. The other thing is too is even if a spouse isn't on the loan, you can actually count their income to help not count some of the debts against the veteran that is on the loan to qualify. There's a lot of ways to make a VA loan work, and one of the other misconceptions I want to talk about when it comes to that is about having one person live in the house while the other's in another state. The veteran could be working for a company, say in Massachusetts, and his wife wants to relocate out to Arizona out here. You can actually do what they call a trailing spouse, where they're both on the loan, and then you just have to count whatever rent or housing expense he may have back in Massachusetts against them. So there's a lot of ways to make this work. When you're writing a contract as a real estate agent, one of the other misconceptions is that veterans can't pay their closing costs. Well, VA changed that 2 years ago. Veterans can pay them. There's a kind of a weird way of calculating it. It's basically the veteran can't pay over 1% of what their purchase price is in VA non-allowable fees. But if they don't exceed 1%, which about 95% of the time they don't, the veteran can pay their closing cost. So there are some advantages still where now you can make offers and the veteran pays their own closing costs, and some agents don't know that and they think they have to ask for it, and then the veteran's offer gets turned down by the seller. So that's one of the things as well. The other thing is VA is 100% financing. So yes, if you're a veteran out there looking, you can get into a house with no down payment and very little out of pocket. So those are some of the things I wanted to talk about today, but if you have questions when it comes to VA loans, I'm ranked as one of the top VA lenders in the whole country. I think I was 5th in the nation last year. So if you wanted those questions answered and you want a true answer and know when your veteran's being told by someone else that can't qualify, odds are I can find a way to help them. Please reach out. Have a good day.